Welcome to The Big Break Show, a podcast where we discuss short-term rentals, entrepreneurship, life, mindset, and everything in between. Here are your hosts, Rafa Loza and Jesse Vasquez.
What's up, everybody? Welcome to a special edition of The Big Break Show, where Jesse and I both wear suits. What's up, buddy?
What's up, man? You know what? You got funny story, quick story. We have Miss Ingrid Duque, who's an engineer or was an engineer and is now a real estate investor. And she's got, I don't know, rough 60 something doors. Anyway, she walked in, and that's not something in any way. Like, she's got 60 something doors. Like, that's a freaking huge deal. So I'm not dismissing that at all. And she showed up on our StreamYard visit today wearing a suit. And I felt like, you know what? I am not fit for this conversation. I got to jump a suit on. I got to throw a suit on. Rafa has got a suit on now too. So,
well, it's funny because we actually started recording this on Riverside, and we had a really good intro to it because it was kind of funny with us all changing. But then it crashed on us, so we lost all the footage. But Jesse's like, I got to change because I'm underdressed, and I was like, well, I'm not going to be the only one without a suit. So here we are, looking all spiffy with my Dragon Ball Z shirt underneath.
You're looking fresh, bro. We're looking fresh. But yeah, you guys, special episode, Ingrid, she's got 60 something doors, did it relatively pretty quick, Rafa, and she's invested in midterm rentals, short-term rentals. She's doing long-term. She's doing syndication stuff now. And who knows, after we just had this call with her, we might end up putting together our own syndication. I mean, who knows?
We might end up doing a deal together. This is what I love about this, right? Like, even though it's a podcast for learning and conversations, like, you never know who you're going to meet and who you're going to be able to work with. She was awesome. Like, this episode, like, this was great. And like, Ingrid's like legit not short of amazing. Like, what she's got going on, what she's doing is really, really cool. And I'm really excited to share this episode with everybody because I had a really good conversation. Like, you know, every now and then we have really, really good ones. And this is one of those really, really good ones. So I'm excited for everybody to listen to it. I hope you guys really do enjoy it.
Yeah, and definitely, you know what? The most important thing you guys can do for us is just take a second of your time right now, head over to Spotify, or if you're listening to this on Apple Pod, just give us a like, give us a 5-star review. If you're watching this on YouTube, give us a thumbs up. This helps us grow this podcast to reach more people. And if it doesn't resonate with you, share it with somebody that it might. And that's one of the only things that we ask, right, Rafa?
Yes, sir. Ring the bell, too, if you guys want notifications when we come out, because we do them weekly, but every now and then we're skipping now. So it's starting to get more difficult with our schedules. But we love you guys. Seriously, thank you guys for being here. And if you guys enjoy the show, we would appreciate some love back and some feedback. Aside from that, enjoy the show.
What's up, everybody? I just want to let you know that we just spent about 19 minutes trying to figure out how to switch from Riverside over to StreamYard, which is where we're at now. And I'm excited because we have Miss Ingrid, who came into the show looking all fresh, wearing her blazer. So now here I am wearing my blazer. Rafa has his blazer on, and we are all looking super professional, except for me with this hat on. But you know what? This is my style now. I don't want to talk about myself. The show is all about you, Ingrid Duque. You have a cool last name, by the way. Let's dive in to talk what you actually are doing here on the show. What are you doing here on the show, Ingrid? Let's talk about you right now. Where are you from? Where are you at? How did you get into real estate? Let's dive into that whole thing.
Of course. I'm here to have fun with both of you, Rafa and Jesse. That's what I'm doing here.
Yeah.
That's what it's about.
But yeah, definitely. Yes. So definitely. So my name is Ingrid, and I am originally from Cali, Colombia. That's Colombia, South America. And I came to the United States with my family when I was 10, 11 years old. We came here chasing the COVID America dream. And I'll tell you more about my background, because even though I am a real estate investor right now, I'm actually an engineer by trade. So after high school, college, I focus on education. You know, my parents were always motivating me to go to college, making sure that I have an education. They said that that's like the only thing nobody can take away from you is your diploma and your education. So that's what I mainly focus on when I graduated high school. I went to engineering school, and after engineering school, my next step in my mind, in order to become successful, was to get a good corporate job. So that's what I did. I focused my whole career after college on looking for that job with that good company that had a pension, a 401k, and paid time off. So that's what I did. I kind of like followed the typical step of going to college and then getting a W-2 job where I would retire pretty much when I was 65 years old. That's my background for both of you.
Yeah, Ingrid, you brought something up there. You said the safe thing. I like to have folks on who are Latino on this space, because I obviously am Latino, Rafa is too. And, you know, you brought something up is, I'm assuming that your family probably said, Ingrid, you got to go to college. Like, you need to get that education. That's the one thing that can't be taken from you. Am I right there?
Yep, that's pretty much, that was kind of like the main focus, as you need to go to school, you need to go get a degree, you need to go find yourself a good corporate job. So that was the main thing for my family. Yes.
Got it. Yeah, that was the same thing with mine. Rafa, probably, I don't know if that was yours or not either, but a lot of Hispanic cultures.
Yeah, I mean, mine was similar. My parents always made me go to school. I was just never really cared about it. So when I got to college, I dropped out, and they're like, "What are you doing, mijo? You're gonna like not do anything. You got to go back to school." And I was like, "Nah, I'm good. I'm gonna figure this out." And here we are, investing in real estate. A couple of
Yeah.
years later.
Yeah, no, totally. So Ingrid, coming here at 11, what was that like cultural shift that you had coming from Colombia? Was it just like Atlanta's kind of, were you in a suburb of Atlanta, or were you like actually like in the city part?
Oh my gosh. So it was, no, I was in the suburbs of Atlanta, and it was actually, oh gosh, it was such a cultural shock because I went to a school where it was 99% white pretty much. And there were only two Hispanics in my whole school. It was my sister and myself. That was it. And just learning the language, it was such a hassle because I mean, you come from speaking Spanish. You do take some classes in South America, but I mean, it's only just to say hi and that's it. So coming here, just getting in, like going into the deep end. That's the way I put it. Just knowing no language. We didn't know anyone. My parents came here, and they came here like a one, like we bought a one pretty much. They didn't have a house, nothing, and it was just kind of like it's either swim or drown in a way, and it was very much a cultural shock. But then I realized that you need to make the most out of your current situation, and that's what we did pretty much. And during high school, we didn't have, my sisters or I, like we didn't have any guidance. We don't have a GPA in Colombia. We don't have an SAT or ACT. Like none of that applies to Colombia. So trying to figure that out through high school and determining that that's going to have an impact to the colleges you apply. And it was kind of like learning on the fly. And so that's what we did. We learned on the fly. We did have a support system within my family. I remember having school nights where we would do homework and we were in English class. So, they would tell you, hey, you got to read like 10 pages about this story and answer these questions. We didn't speak any English. So it was like my mom, my dad, my little sister, and my older sister, all of us with like those books, like those translator books. And pretty much like everybody would take a word and just be like, okay, what does this mean? So it would take like hours just to translate like one page. So it was a lot of hard work pretty much.
That's really cool. How old were you when you came out here?
11.
Oh, you
11.
said 11? Oh, okay, I missed that. I'm sorry. Yeah, okay, cool. So, it's funny because I came here when I was 6 and I didn't know a word of the language either. And it was me and my
Mhm.
twin brother at the time. And the way that they did it for us is at our elementary, they ended up separating us. So they put him in a different class.
Oh,
Like, it used to be different like grades, like class, like grade A, B, and C or whatever, like the sections. I
Yeah.
don't remember what they're called.
yeah.
But they put him in a different one than mine. So we ended up getting split out. It split up. And we would meet up for recess and stuff like that. But I think the fact that they did that and separated us helped in the schools for us to kind of get accumulated to learn the culture and learn the language. It took me about a year and a half maybe till I can actually learn English. But I don't recall ever doing something like that in my house where like we had like a sit at home and like study together. Maybe we did. I don't remember, but we did have a lot of homework to learn English. So that's cool that you guys have that kind of support. How many of you is there in your family?
It's five of us, three daughters.
Oh, cool. Okay. Very, very cool.
Got it. That's awesome. So were you, being the only Hispanic person in your school, were you like picked on all the time? Did you deal with all that kind of stuff?
Yeah.
Yeah, me too. I was
Me
one of
three.
I was one of only I don't know, back when I was in elementary, probably only like 25 Hispanic kids, but everybody used to call me like Bean. They'd call me like freaking, Beaner. They'd call me like
I don't mean to laugh, but yeah, I used to get that too. I used to get pinched by girls. It was awkward.
they'd call me Frijole.
Yeah.
They'd call me
Oh,
Quesadilla.
definitely.
So
Oh my gosh.
can you believe that?
No, we did. We did
We're
get.
gonna have our own support group right now.
No, they are. Yes, we're gonna-
This is our
No, but
Hispanic.
definitely yes.
Yeah, no, that's the tough part. So so when your family got into the country here, I'm assuming your parents went to work. Did they talk to you, or were they like financially literate when it came to like spending? Was it like the very safe? Like, did your family teach you about real estate, or how did that all come about?
No, they did not. Especially, at least in my family, and I go back and visit my family in Colombia. It seems like talking about money and finances is very taboo. You don't talk about how much you make. You don't talk about how much you spend. So that was kind of like learned on my own as I was growing up. But how did I get started in real estate? This is actually a very interesting story. So it was 2014, and I was working on my corporate job. I was the loyal employee, always there on time. I only had 2 weeks vacation. I didn't want to spend more than that. I was very, very cautious about how many sick days I took. Very, very loyal employee. One morning, it was fall of 2014. We had a meeting within my department where like our manager came and he's like, hey, you know what? The company is going through this financial restructuring. We're going to have to lay off some people. And that day, within a couple of hours of that meeting, 70% of my department got laid off. Just like that. They're gone pretty much. And that kind of like made me realize that you cannot confuse being useful to a company with being indispensable. Like they can replace you at any time. You can go ahead and work 80 hours a week, never take a sick day, never take vacation. But when it comes to the company saving money, you're just a number. So that helped me realize that. And I came home that day and I was talking to my husband and I was like, hey, we need to have a plan B. There has to be a backup plan because, we're doing things correctly, right? We have this job and we show up to work. We're very loyal employees. But look what happened today. And the first thing that came to mind was real estate. And when I was growing real estate back in Colombia, and I've noticed that in other Latin American countries, like you need to own real estate to be considered wealthy. You need to own your house. You need to own this or that. And stocks at that time thought it was out of my reach. Like invest in the stock market, I didn't know anything about it. I thought that was only for Wall Street people that were very wealthy. I didn't know that it was accessible to me, someone who wasn't licensed to trade stocks. I didn't know any of that. So I told my husband, I know nothing about stocks. All I know is that we're not creating more land. And we need to buy something. We need to buy a house, an investment property. We'll figure it out. And that's what we did. We were living in Pennsylvania at the time. And I was raised in Georgia. So that's the area that we focused on because we were semi-familiar with it. And to be honest, when we bought our first property, I knew nothing about real estate. I didn't know how to screen tenants. I didn't know what Bigger Pockets was. I didn't read a book. I just knew that I had to buy real estate because we're not making more land. And that was it. So we spent all of our savings on this one property located 20 minutes north of Atlanta. And to be honest, that was the biggest lesson learned because my first tenant became my first eviction. And it was such a hassle. It was insane. I did things you're not supposed to do. And that's why I tell people don't do what I did with your first property. Because we were painting and cleaning the property. And then this one person came and he's like, oh, are you guys renting this house? And I was like, yes, we are. And then he's like, how about I rent it from you guys? And here's 3 months worth of rent. And I was like, oh my gosh, we need money. Yes, sign this. Here are the keys. I didn't do any background check. I didn't do any credit check. I didn't do any type of check on this individual. And guess what? After 3 months, he stopped paying rent. So lessons learned, and it's very different right now. We have systems in place where we do a thorough check of the possible tenant that is moving in. But yeah, that was my first property.
Dude, so I got a ton of questions because number one, well, you kind of answered it a little bit, but I was curious, how do you just go from, I think we should invest in real estate? Because a lot of people don't think that way. Like for me, it was the opposite. I actually thought I could invest in stocks by just throwing some money in a stock market somewhere. Then if real estate, the real estate didn't come to mind until I was in my early 30s, probably. Maybe my late 20s, I don't know, something like that. But it wasn't something that came to mind where I was like, oh, I think I want to invest in real estate. That to me was almost out of reach. And I think it's also because of the cultural part of it too, because it was really hard for my parents to get a house out here when we were growing up. And then when they got their house, they lost it in the 08 whole crash thing. So my entire thing was like, man, I don't know if I'll ever be able to own a property. And then I got into real estate and I'm like, oh, okay, cool. Right. It becomes this normal thing. But what made you go, I think real estate's where we want to go, aside from being, the whole part where in order to be considered wealthy, you have to own land out in Colombia. But was there something else around your mindset shift that made you think about real estate before anything else type of investing? That's my first question.
Yeah, definitely. So what happened was that it was around 2014 and I kept hearing, like an NPR and news like that, talking about how houses were selling very, very cheap. Some houses were selling for 10,000, 20,000 in 2009. And we had the money right there. And then I told my husband, what are we going to do with this money? What are we going to buy? Like, and I don't have any other businesses. I didn't know about anything else besides just being an employee, like a engineer pretty much. So we kind of put together like a list. Okay, so let's create our own business. What do you know how to do? Well, we're engineers, right? So having an engineering company comes with other expenses. Well, okay, so this is too hard to create your own company with engineering. And then the stock market, I'm like, I don't know nothing, and it's only for wealthy people. So that kind of like off. And one of those list items was like real estate question mark. And I was like, well, let's look into real estate. And that's where we started like saying, okay, how much are houses selling? Because I mean, when we lived in Pennsylvania, houses there were like 200,000, 300,000. It's way too expensive. So when we opened the Zillow on Atlanta, we started seeing houses for like 50,000 and 45,000. And then we started seeing the rent. Okay, so rent here is $900. You know, we could make something like that work. You know, if we have this much money, guess what? Instead of spending them on a car, let's go get a house that is 50,000 or 70,000, depending on the area, and we can rent it for 900. That just makes mathematical sense. We're running the numbers pretty much, very high level, because we didn't know about vacancy, we didn't know about repairs, nothing like that. It was just like price, compare that to how much can I rent this for, and usually in a very healthy market, appreciation happens. We'll just play like that. So we just bought the house. And then we said, you know, worst case scenario, the way the market is moving in Georgia or like around the US, if we don't like it, we can kind of like sell it. And we'll recoup whatever money we put in, because it's so hot right now that people are just paying money to own real estate. So it was I want to be like, I didn't have a detailed plan. It was more like high level of like, what should we do with this money? And real estate just came to mind because we saw the possibility of buying a house for that much money.
Got it. Is your husband also an engineer?
He is an engineer, yeah.
Did you just really out of curiosity, you're making your list of like things to do. Is that because like an engineer thing? A lot of people don't think like, let me put a list together of what we can work on. You know what I mean? I'm just curious. Like, is that a thing?
It is for us. I don't want to speak for every engineer. We're very number focused. Like, does it make sense? Is it logical? So that's how it worked for us. We're very, especially me, I'm very into doing lists for everything. Like I have a to-do list for my day. I have like my goals and stuff is KPIs and all that good stuff. Like I'm very visual like that. So yes, we did that together. Yeah. We're weird like that.
You know what's crazy? If we can do a tally of the last 45 episodes, I guarantee you, Ingrid, that at least 5 or 6 people that have been on the show already are engineers. A lot of real estate investors are engineers. Tons, right, Rafa?
Yeah.
I feel like that's like a blessing and not so much a blessing too, because we are very risk adverse. We don't like to take too much risk because we're always into that safety margin. You know, we don't want to do this. So in a way, I can see how that can be like a double-edged sword, because you run the heck out of your numbers and you know every single number, you know your percentages, but then you also have that risk assessment of like, well, you know, especially if you're like, I'm in the nuclear world too. So the safety margins have to be like 40-50% if you're dealing with like the lives of people. So when you run like your numbers for a property and your safety margin is like 9, you're like, no, it has to be higher than that, and then that impacts your numbers and stuff like that. Yeah.
Got it. So you guys were making pretty good cash then as engineers, because engineers make pretty decent cash flow. So you were just like, what do we do with our money, since your husband's an engineer too, right? Is that kind of where it was at?
Yeah. So like my starting salary as an engineer was 47,000.
I thought it would be more than that.
I know, right?
What the heck?
I know. So it wasn't like huge, but something, and actually that comes into my other strategy. So I'm all about adapting to your circumstances. So we bought this house. We had been saving for a very, very, very long time. And at the beginning, I was more towards we needed to have a budget with my family, like my husband and I. So we sat down and we budgeted the heck out of our income, like a lot. Like my mentality was, we need to save as much money as possible. I wasn't really focused on how can I make more money. I was mainly focused of like, how can I save the most right now, period. We were able to save a lot of money, but then that was it. We weren't able to grow. So my next strategy is, okay, so this worked out. If I want to become more attractive to banks, I need to make more money. So in my head, I guess my engineering mind was, how can I make more money in my W-2 job? The more money I make, the more attractive I become to banks and the more I can save. So that was my next step after my first property is how can I leverage my W-2 job in order to be able to grow? And for the next 4 years, so I took like a hiatus per se because I was strategizing how I can make more money. From 2014 to 2018, I was focusing on my career and how I can improve and increase my salary. And it was very strategic because every year and a half or two, I would skip and go to a new job. And I would have like a 30% increase salary or like bonuses. That's when I started learning about, hey, you can ask for bonuses if you want to when you negotiate. So that actually increased my cash flow, my income like significantly.
Dude, you know what I love about that, and the reason I asked the engineering thing is so little quick backstory because I used to work with this lady whose husband was an engineer, and she used to tell me like, oh, it's an engineer mindset that we just have to figure everything out because that's what engineers do. Like they have to solve problems and figure stuff out. And I know, and I say that because the way you say things, Ingrid, is like you legit sit down and you figure out, okay, this is what I need to do. How can I solve the problem to get to this? And then I need to do this, and how can I solve that problem to get to this? And a lot of people don't think that way, right? A lot of people are just, aim, shoot, and go, right? Some people like they just think about it and never actually do anything or put anything into action. But you actually made a plan, you sat down, you worked it out. I mean, the fact that you're trying to figure out how to get your W-2 income up through your same like industry is like crazy to me because I've never heard anybody else like think of that way or even try to do that way, right? So I really, really like that you're saying it that way. How do you apply that now in your real estate like investing?
Ah, it's so cool because like I like to see how I can improve my strategy. So it comes down to looking at what works at this moment and how can I adapt my strategy. So first, when I started investing, it was mainly long-term rentals. Long-term rentals is all good, right? Again, like I told you guys, I was focusing like on the north of Atlanta. And during this 4-year break or hiatus that I took, when I was ready again, hey, I have the down payments, I can now really go and buy properties. It was 2018. So much time had passed by that those properties north of Atlanta, they actually had increased like a lot. Like something that was 70,000, it was like 200,000 now. So what I did, I started looking at the whole map and being, okay, so let me compare where I can find, more affordable housing compared to the rents. And then I saw this one little property popped south of Atlanta for $52,000. And then I looked at the location. I'm very critical about the location of my long-term rentals. They need to be located so close to certain stores, to the highway, to the park as well. So I found this property, $52,000, and I bought it. We bought it and we started painting everything and we put it on the market just to test it out. Within 24
Cash?
hours, we bought it cash, yes.
Okay.
So we bought it cash, $52,000. We put maybe like $2,000 in paint, pretty much, and then it was just cleaning and that's it, and mowing the lawn. And when we put this house on the market, within 24 to 48 hours, we had like 40 applicants. Now, something that I noticed though is like one of my questions on the application is, why are you moving? Like, why are you leaving your current house and why do you want a new one? And 90% of the answers were, my rent is too high up north. I need a more affordable house. And I bought this house for 52,000. It rented for 1,000. Then I told my husband, if people are moving because rent is so high up north, it's going to be a huge influx of people moving here south. Like they're going to need a place to live. So that same month, we bought like 4 or 5 more houses pretty much in that
Cash?
area. No, not all of them. We bought some with loans pretty much and some other ones with lines of credit. So all of the ones on the bottom, we pretty much bought them and they all got rented and now everything has been appreciated. But as time went by, again, all the houses, even down south, were increasing in rent. I mean, not rent, in prices and stuff like that. That's when COVID hit. And it was 2021. And then I told my husband, you know what's going to happen? We are going to need healthcare professionals. They're going to need to live somewhere because of COVID. So many, companies are closed. Hospitals are going to be crowded. We should look into finding houses close to hospitals. And that's where I discovered the midterm rental strategy. And that's where I started buying properties near hospitals in order to do midterm rentals on those. At the same time, I saw how we couldn't leave the country because all the borders were closed. And I told my husband, it just makes sense that people need to vacation somewhere. And we started investing in short-term rentals in the Smokies and stuff like that. So it's all about looking at the market and see how it's slowly changing and trying to keep ahead of that? Or maybe if you're not ahead of that, how can I pivot my strategy in order to take advantage of what's happening with the market?
So I got a question for that, which is you're awesome, by the way, because everything you're talking about is super badass. But I have a question around this because do you feel that in order to know these trends, you have to be involved in the whole like ecosystem of that sort of investing, like being around other investors, talking to other real estate investors, or can any random person just start doing research and kind of see trends on their own? Like, how do you feel about that?
I would say to do it on your own. I feel like, yes, you can do it on your own. Would it be simpler and more evident if you start talking to people that are investors? Yes, of course. Like if you tell me, can I learn this trade by watching YouTube videos? Yeah, you can. But if you talk to someone that can actually pinpoint, hey, this is what you need to do, or this is the items you need to look out for, I think that gets you there faster. And I would say that I started doing more meetups and talking to more investors, kind of like picking their brains and stuff like that. Just kind of like saying, hey, I noticed this is going on in the market. What are your thoughts on that? And they would be like, well, I noticed that it is happening, or no, actually, it is because of this or that. So that having the meeting of the minds between fellow investors really helped me as well.
Do you put a lot of the stuff that you learn at these meetups into play, like actually put the strategy into play, or you like, because the reason I ask this is because I hear a lot of different investors talk about a lot of different things that are happening in the market or things that are going to happen or that are trending. But a lot of people just kind of go, oh, okay, cool. And then they just kind of put it on the back burner. Or are you the type of person that actually takes that information and then goes home and does the research on it to see if you can apply it in a specific way?
I do. Yeah. And again, I don't go and I just like, it's not like I do that with every single thought that I hear at the meetings. It's more like, okay, so something that may apply to me. Like I was thinking about doing Airbnbs, like short-term rentals. So when I, here, and I'm like, oh, that's interesting. Let me check that out. So I would just take notes and be like, I would go home and do the research. But then now I have this contact that said something along those lines, so I can contact them and bounce ideas off. So I wouldn't say just write everything down and just go crazy, because otherwise you're going to go down this rabbit hole. Is on what your goals are. If you're looking for Airbnbs or short-term rentals, talk to people, be vocal about what you want and what you're looking for. When you talk to people, make sure that it aligns with what your goals are. If you have a goal of just doing midterm rentals or short-term rentals, focus on those thoughts and those opinions, and then trust but verify. Go on your own, do the research. If someone is telling you, hey, the smokies are blowing up, blah, 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 don't just go blindly buy a cabin. Run your numbers, look into the news. Where are they telling you about the area? If it's something that aligns with your goals, then definitely dig deeper into that.
All right. So hold on, Jesse. I got another question. Ingrid, what do you like better, short-term rentals or midterm rentals?
Oh, come on. I know the answer.
I like midterm rentals.
Damn it. That's it. I'm logging off.
Bye, Rafa.
Bye, Rafa.
So see you later, buddy. Okay,
Yeah.
hang on. I gotta rewind this a second, because we were just talking about trends and everything that happened with the with the shift with the pandemic.
COVID.
We had a black swan event.
Yeah.
COVID changed the way people live, lodge, travel, everything. So now these big areas like the Smokies, Joshua Tree, like those places are starting to dwindle down. So I can talk to you guys about what I see happening, and then Rafa's going to have his own interpretation of what he thinks is going to happen, and Ingrid, you're going to have yours. So like, what are you doing right now with your real estate? Like in those like that's where everybody's investing. They've been investing since 2020, right? You couldn't buy a property. So now are you pivoting out of those markets? Or are you going to stay there? I mean, the returns probably aren't going to be as good at what I'm assuming, but can you elaborate on that a little bit, what you're doing now?
Yes. So right now, the cabins that I have, when I bought my cabins in the Smokies, I wanted smaller cabins. And I had a strategy for that pretty much. Like some people were going for like the 12 people, 17 people cabins, which is totally fine. But in my opinion, it was more like, okay, when can you use those type of cabins? Usually during summer and during winter or Thanksgiving, where the kids are out of school, or when you're able to gather 11 people. Now, if someone's family is like my family, for us to have a family vacation, it'll take like 7 months like of planning, because everybody has different schedules. Honestly, it's like hoarding cats in a way. But what I did, I focused on the smaller cabins, the ones that are 2 to 4 people. Because my reason was, if you have your girlfriend or your wife or whatever, your friend, and you want to go to the Smokies, you don't have to wait until summer. Like you can take 2 days off during the week, March or November or October. So my cabins are usually smaller like that, 2 to 4 people. And I would say one of my best months has been like March and October. like best months. Because I mean, you don't have to wait for like a huge party of people to be available. You can just keep it small and still have a good time. Having said that, though, I do see what Jesse has mentioned, that I do see that people got into the Smokies, into the Joshua Tree areas way too much. So what I have now, I'm not looking yet to expand to buy more cabins. I do see them going down in prices. I'm just keeping a close eye on those, but I'm also looking into other types of investments, and I'm utilizing lines of credit in this instance. Right now, I haven't refinanced my properties. I thought it was better for my strategy to do lines of credits on the equity of those properties that I have in Georgia. So that's what I'm focusing on.
Can I break that down for a second? Well, first off, I think you're making a smart move. I think that, and this is just my opinion, and you guys in the comments can tell me that I'm wrong and I don't know what I'm talking
He's
about.
wrong.
He's wrong. No, he's right. He's going to say something good.
So what I'm seeing right now is, and I just made a YouTube video on this not that long ago, last week. I talked to probably in a week, probably 20 or 30 people. Like I take calls, just people that want to learn about midterm and stuff like that. And there's been so many investors that are flippers that are now getting involved with midterm because they know that they can't flip properties and they know that they can't refi out in 6 months because the interest rates are crazy. So like when I'm hearing these guys talk, I'm like, holy crap, this is a golden opportunity. First off, for somebody that's can start a property management agency, become an expert in your field. All these guys need to do is have somebody that knows what they're doing and talking about, and then all of a sudden deals are going to happen. So like everybody listening right now, like grabbing this information from us, if you're just thinking about like getting in the midterm space, like become an expert in that, because there's all these people that are coming in right now that want to learn about it. And if you're doing things like intuitively and sophisticated, and we talked about this earlier, right? You keep your ear to the ground, you find out what's actually happening in your market, what's happening globally, what's happening, let's say in California, whatever city you're in, you start to see those trends, just like the pandemic. Like we saw, Ingrid, you saw this too. The pandemic hit, and all of a sudden, we know the travel nurses need to be here, right? There's like the U.S. has a crazy, awful healthcare system, which was like exposed to the entire world, and a lot of countries do, not just us, but ours is not really that good at all. So that's like, okay, cool. There's my pivot there, and then now we see this other kind of shift that's happening, and it's not cyclical, right? It doesn't happen the same way every time. It changes, right? We can't say this is 2008. I didn't really invest in real estate in 2008, but I watched it kind of like Rafa did. Like my family lost property, they went bankrupt. But now looking at it from a different angle, I see all these potentials and all these possibilities to continue to grow in these markets. And I feel that for us, if we are listening and we're intuitive, like we're talking about this right now, like we're seeing the shift, we're seeing the prices that are going to go that are going down. And I'm actually going to be picking up my first subject to property. Rafa, I think I talked to you about this. And I'm learning it. Like, I don't know anything about subject to. Like, I need to talk to more people about it because I don't know what the hell I'm doing. But you know what happened is a property that I used to manage for a short-term rental in Lodi ended up, they can't sell it. It's this beautiful home, amazing. Like, I don't know why anybody wouldn't buy it. It's like the best house in a whole block. You've seen those before. It's like this most beautiful home. And I called them and I said, hey, if you guys can't sell this property, I know it's been on the market for 120 days already. Like I'll buy it from you. If you need financial assistance, I'll figure it out. And they finally got back to me. I got a random call. Hey, Jess, can you help us get out of this? I already know this property is going to kick ass as a short-term rental. They only had it on for 2 months. So that was just me looking on the Zillow, looking on Redfin, and seeing how many properties are sitting on the market for more than X amount of days. People need to get out of these things. And that's whether it's a financial situation, whether it's a divorce. I mean, there's a billion different things, right? And I think that I'm making it sound easy by talking about it like this, but really it is literally just as easy as picking up a phone, looking at 90-day plus properties that are sitting on the market for that amount of time, and using PropStream or calling the agent and saying, hey, here's what I could do. And I think that right now is a really good time to do that. So speaking of this now and what the market's doing, so like your pivot strategy is you're going to continue to hold your spaces in Smokies, right? And you're going to do more midterm right now? Or are you going to do more short term? Are you going to invest more in localized markets? Or are you going to stick for like, what's that look like? And then after that question, I want to talk about the income that you grab from properties, because that's another thing that I don't know much about. And I'm sure our audience doesn't know about pulling actual equity from properties.
Like, oh my God, I love lines of credit. I can definitely talk about that. That's what I'm doing right now. I'm becoming an expert in lines of credits right now. So what I'm doing now is I'm still looking for properties in the midterm rental space. That's kind of like my active income is looking. I'm a real estate professional now because I left my W-2 job 4 months ago. But also I'm actually emphasizing the passive income aspect of it. So I joined it. I joined, and when I
Passive.
say, yeah. Well, no, not to confuse this, because I know you guys had a live the other day about this. So if you're,
I was about to step in and be like, I don't know, but okay, go ahead, Ingrid.
Oh,
yeah,
sorry, Ingrid.
if you are actively managing a property, that could be long term, that could be mid-term, that you never hear about it, or a short-term rental. I like to call those passive aggressive. Sometimes it goes well, and then suddenly you get like 20 phone calls. So that's active income in my eyes. But when I say passive income, is talk about doing private equity funds that invest in syndications as LPs. So in that sense, in my mind, that's completely 100% passive, because I join a group, we do private equity, we raise money within ourselves, we negotiate terms with the operator, and then that's it. We put in the money, and then every 3 months or every 6 months, we get a check or a wire into our bank account. So I'm actually focusing on diversifying my income, where I have passive, where I don't have to worry about anything. I just need to vet the operator and vet the deal. And if I like it and I like the returns, then I invest in those funds and they give me money every 3 months. But I'm also actively looking on the side for my active income, which is real estate investing.
You know, I love the way you said that, Ingrid, because yeah, we argued about that the other day on this Instagram live thing, right? And I explained it. I explained exactly what you said in detail, because it's not passive, whether it's midterm, long term, or short term. None of it's passive, because there's going to come a point where you have to deal with a bunch of work, and then it becomes active. And I love the strategy that you said. Now you're diversifying a little bit to them, because I'm doing the same thing now. Like, I'm starting to take my money, and instead of me going out and doing all the work and adding it to my systems, like, I just want to give it to someone, let them manage it all, and then just receive a quarterly paycheck.
We need to talk, Rafa. We'll need to talk.
Yeah, for real. And it's funny because this morning we did a raise. We did a raise for a hotel that we're doing, and it's the same thing. Those people that give us the money are going to be the passive investors. That's true passive. I'm going to be doing the active work of managing it and making sure that it generates the revenue to pay those passive investors. Big difference in between each one. So, go ahead, Jesse. I know you had another question before I change the subject here.
No, I think that's smart. And I think there's a lot of people that are going to be pivoting into that now. That's also part of the transition of real estate, is like more of those syndication kind of deals, because deals are harder to find, right? But they're also easier in a different way. Like, I feel like we just talked about it a second ago. A lot of people are talking about how hard it is and whatever and whatnot, but I think that there's opportunity here. But what I'm trying to say is that as the market's shifting, people that are super intelligent, like Ingrid, yourself, and like, you know, this group of like a mastermind that you probably are part of, that I see you posting on a regular basis, you guys are probably looking at doing your own syndications. Like, that's what I want to do. Like, Rafa, me and you need to like sit down, identify, all three of us, identify markets throughout the entire US and start really figuring out, like, hey, we know that if we get a 20 unit building here, we can get a contract with ALE, with AMN, whatever these companies. And then now we can underwrite these deals, and we know exactly what we're going to get. And then we're going to bring people in to fund this. And then we're just going to pay them. And then we're going to refi, pay their all entire money out. And guess what? We get to hold that chunk, or we go to another property and do the same exact thing. And I think that that's such an intelligent way, but it's also something that like you can't just jump into unless you know people, which is the great thing about real estate, right? Is people want to borrow your money, and then you can also in leverage be able to talk to them. And I hate the saying pick the brain, because I get people that message me that all the time, and I don't know what to say about it. Yeah, it's bringing value, right? You're bringing value, which is your dollar amount, and then I get to sit with Ingrid and talk about these deals and all these things that are happening. And I think that's where you know, being able to have conversations, and there's just so many opportunities for people out there. And I think a lot of times we get scared or we get stuck. Like today, I was on Rafa's call listening. He's like, dude, do you want to listen to this call? And it was a bunch of investors. And I'm sitting there looking at the numbers and the projections. I'm just like, holy crap, 2.6 million. They're projected at 3.3. Like, this is scary. Like, Rafa's going to be managing this thing. Like, he's a GP on this big, giant thing. But in reality, it's like, it's the same thing as if I took a 4-unit building and just magnified it times 10. It's like the same amount of work. But my brain was limiting myself in the thought that instead of a 4-unit building, it's now just a 14-unit building. And I think even for investors like myself, like that's sometimes a mind shift in their perspective and mind. So I don't know. I love this. I love this idea on this. And Ingrid, I'm going to just tell you straight up right now, like, I'm a visionary person. I can go and have all these great ideas and talk about this. And then I need that innovator to come in and be like, okay, cool. Here's everything on paper. We're laying it out. I like these ideas. Here's my input. Here's my thoughts. And I think that's where it's really hard to find that like balance. If you have a pendulum, right? It's like you have the two balancing ends, and how you get those things.
There's actually a book called Rocket Fuel that talks about being the visionary and being the integrator. And I find myself being an integrator. I'm an engineer. I run the numbers out of everything pretty much. So I feel comfortable with that. So Jesse, we need to talk. Rafa, we'll talk.
It's so funny, Ingrid. I was about to say, like, you need a visionary and you need an implementer. And I was like, Jesse, you're the visionary. I was like, Ingrid, you're the one that implements stuff. And then you said it right before I was thinking it. That's so funny. Yeah, absolutely. What was the name of that book again, though? Because I want to download it or buy it.
Rocket Fuel.
Rocket Fuel.
Fuel. Yeah. It talks about partnerships. Yeah.
Yeah. It's on my list to buy, actually. Yeah. Okay, cool. It's funny because I've been telling Jesse the whole, like, because I was trying to arbitrage it was like a 12-unit building. And I was like, hey, dude, partner with me. You'll be the guy that does all the midterm rental contracts and I'll just manage everything on the ground. And he was like, I don't know, bro. So we ended up not doing it. And now he's talking about buying a thing to do the exact same thing. And I'm like, see, except now it's obviously a different situation when you purchase than when you go out and rent an entire building. But yeah. I think that if you find the right people for the right thing that you need to accomplish, right? Like, again, the implementer versus the one that comes up with the idea versus the one who manages it. There's a bunch of different parts, right? Like that whole who, not how thing that we always talk about. I think you can really, really make it a really good venture where everybody wins, and specifically on how you're trying to get to it for, like, whether it's actual passive, Jesse, or, you actually want to do the work yourself.
Well,
no, definitely. Yeah.
I think it's a partnership, right? You got to, but the most successful people that I've seen know their roles. They know what they're good at and they know what they're not good at. And usually you don't want to have two visionaries coming together. Imagine Rafa and I coming together. Actually, Rafa's good at putting systems together too. So what am I talking about? And you're a visionary. So you're kind of like a little mixture of both.
I'm in between both.
Yeah. So like, I know myself, Ingrid, I'm a visionary. Like I can come up with these ideas, these concepts, like, oh, that's going to be freaking amazing. And then I need somebody that's the opposite of me. It's like, cool. These are great, but here's real life. It's about to smack you in the face. Like, we can't do these things. You're that person, Ingrid. But anyway, I think that, when you're in business, like, you have to have that, like, emotional intelligence. I don't even know if it's emotional intelligence, maybe just that business acronym intelligence that comes along with it. Just really understanding, like, who you are and what you need. And every successful business that I've watched, when there's been co-partners or people together, it's always been that visionary and that innovator that, like, balance each other out in that aspect. And I'll check out that book too. I think that's a really good, it's something that I feel like not enough people talk about, first off.
No, and Jesse, like, I think it comes down to being very self-aware of what you're good at. I mean, you have to be very self-aware when you say, hey, I'm really good at this, but come on, I suck at this. So you have to be self-aware of knowing where your weaknesses are, and you got to complement that weakness with someone that has the opposite of what you have, pretty much.
I think that's hard to figure out, though.
It's hard, but I think it's hard, in my opinion, it becomes harder when you don't like to admit that you're really bad at something.
I was about to say that. Yeah, I think the most challenging part is being true to yourself and saying, hey, I suck at this and I need someone help me.
Exactly, because it makes you feel like you suck, but no, you don't. Like, you're really good at something else. You just need to find someone else that compliments you.
I'm really good at, like, being like the guy that says, like, hey, tell me what to do and I'll just go and do it, rather than, like, me trying to sit there and figure it out. I swear.
The figuring out's the fun part.
The making it work, it's fun.
Yeah. Maybe for Ingrid, it's fun. To me, I'm like, how do I just do this ASAP?
How do I figure this out? Well, that's why you pay people to do that. And that's what an innovator does. They're like, you're a part of your payroll. They come in and they implement the stuff that you think about. But yeah, sorry, I'm kind of derailing this conversation, but I like where we're going with this, because this is in real estate, you need that. You need somebody that's good at running numbers. Mm-hmm. You need somebody that understands what kind of property to get. You need to have somebody that understands the back end of things, construction. I mean, there's multiple different layers of real estate, right? It's not just like a property. There's all kinds of things that come involved. They're involved with it. So tell me a little bit about what your portfolio looks like, what it looks like now, and what your goals are, kind of moving forward through 2022. We're in Q4 now, rolling into 2023. Like, what's that looking like for Ingrid?
So, like, right now I have about 60 plus units. It's a mix of apartment complex. We have like a 34 unit, and I'm under contract on a 14 unit right now. And then I have single family homes. And right now what we're doing is I have a mixture of, like, long-term rentals are my backbone, pretty much. They are my backbone. They're the ones that pay my bills and everything and my mortgages. And then I have my cash flow cows, pretty much, my short-term rentals, and I have my midterm rentals. And on the side, and I especially focus my Q2 and Q3 of this year, getting lines of credit and getting very familiar with equity on how I can leverage that equity. I'm taking that equity in those lines of credit. I have, like, you can say, like a fund, pretty much, And I'm using that money and I'm investing passively in private equity and syndications, like Rafa just mentioned. So I have deals that are coming and we're analyzing them as a group. You get a return of like 25% or 30% IRR, and my interest rate is 6% on my line of credit. So I'm pocketing the rest and moving the money around.
Got it. Okay, so now I really need to know about, because I get asked this question and I'm actually curious about this. I have properties, like how do I can do it out of my primary easy. I just refied my primary. How the hell do I refi my investment properties?
Okay.
I can't find a bank to do it.
No, you can't.
No, I can't.
How many banks have you called?
I was about to ask the same question, Ingrid.
Yes.
I called.
Do you have a checklist?
I do. Yeah. I'm going to tell you guys right now.
Jesse, you need to talk to Jeff, dude, or to Jason. But hey, really quick, while he looks at his checklist, Ingrid, he doesn't need to refi for equity line of credits, right? You can
No.
pull the line of credit and not have to refi and take advantage of the equity.
Yeah, correct. So that
No, you can HELOC.
Yeah, refinance is different than a line of credit. So what you need to do, Jesse, and I would recommend, is get in touch with local banks, like small banks. If you go to the bigger banks, like Bank of America, Wells Fargo, like Chase, all those banks, they are less flexible with you. And what I did with my properties, I went to local banks. Like I have one in Atlanta that only has like 2 offices in the whole Atlanta area, only 2 offices. And what they do, they review the property, make sure that, yes, it has equity, and they'll give you a line of credit on it. Now, you do have to pay closing costs, and those are going to depend on the bank. Some of them, they charge you for appraisal. Some of them will just use Zillow to appraise the house. They charge some of them 1% origination fees. It all depends on the closing costs, but then you're able to get that. And let me ask you this, Jesse, is the property under a LLC or under your personal name?
I have both, but like the personal name.
Okay, personal name. So for those, something that I found is you really have to get to the small banks, like the very, very, very small banks, like the ones that have like 2 offices or 1 office pretty much. For the LLC, that becomes more of it is a line of credit, but it's a commercial line of credit that uses the equity as collateral. Now, something that I found out is when the property is under your name, that's considered higher risk, because what's happening is that banks see that Jesse owns his house and he's paying mortgage on this. So now we need to account for Jesse also paying for this HELOC on an investment. When you do a commercial line of credit, believe it or not, they'll use that property's income to pay for the line of credit. So they'll stop going to Jesse, and this is not going to be on your credit anymore. Like the loan or the line of credit is not going to be reported on Jesse's credit. It's going to be reported for the company itself. So I found that in my case that it's easier to get a commercial or business line of credit, a secure line of credit, if you have a business or LLC on the deed of the house.
Got it. So do you have to have like, like with the car and stuff, you gotta show that payment for a year for it to qualify as like a business, do you have to do the same thing with the property? Does it have to, if you put it under the business or LLC, does it have to show recurring payments for a year for it to fall off your personal credit?
What do you mean?
So you know how like if I got like, I'll just give you an example. Like I got a loan for a car, like say I bought a Tesla, like a Model X that weighs 6,000 pounds or whatever, whatnot. And a lot of the banks sometimes will want to see that this property or that this car or whatever it is, whatever item it is paid for a year before it'll actually fall off of your personal credit and just fall under the business. So they want to see that recurring payment happen on just say 6 months or a year, whatever it is. Is that the same thing with this? Like if I was to take out a loan based off of an LLC that I have, that it would need to show a certain amount of payments before it falls into the company?
No. So in this case, if it's like under an LLC, it's gonna show on the LLC period, and it'll show the LLC owns this loan or has a loan under its name, but it's not gonna show at all under the person's name. You will sign though, like Jesse, you will be, since you're the owner of the LLC, you're gonna sign the paperwork, but it's not going to affect your debt to income ratio. It's not going to affect your credit at all. However, when they pull they're going to do a hard pull on your credit.
Right.
It's going to show under your name, but then all the debt that you have under this is going to show under the business.
Got it. Cool. I didn't know that. That's good to know. That's definitely good to know. And I called, just so you guys know, I called 11 banks.
That's it?
Yeah, that's it. And out of those 11, 7 of them were credit unions, and they were local too, by the way. Smaller credit unions. And
so do they tell you why they're saying no?
Yeah, they only say they only lend off of properties that you live, not investment properties, only personal properties that are being lived in. They don't have a program for that. So you're gonna have to
Okay.
maybe shoot me your person or somebody you connect with. And
Yeah.
Jason doesn't do that either, Rafa. They don't do HELOCs, or they don't do those kinds of loans. So this is not a HELOC what you're talking about, right? This is a completely different thing than a HELOC.
So what I'm talking about is, okay, so when it's under the name, like if it's under your name and it's an investment property, it is kind of like a HELOC pretty much. It's called like, you're using the equity. When it's under the business, it's called a business or commercial line of credit, secure with the equity as collateral. So,
Got it.
but it's not really considered HELOC. Technically, a line of credit can be secured by any asset. It can be by a car, whatever it is that you have assets. In this case, the asset you're using is the equity in that property.
Okay, so now I got another billion questions. I know you're not a banker. So what happens in the decline of equity? Like right now, we know there's going to be a 10% variance in equity going forward, potentially, depending on what city you're in. So now what? Are they going to base that off the price now, or are they going to base that off of what?
Price now.
Price now. Okay, got
No,
you.
it's going to be, and depending on again, I'm not a bank. It all depends on the terms of the different banks. But depending on, let's say they go to your house and they find out that, hey, you have $300,000 in equity. So you'll get a line of credit on that equity, and there's going to be a term on that line of credit. This is not like a mortgage that is like 30 years, nothing like that. That term is going to vary from 1 year to 3 years. Usually I've seen some that are 5 years, but usually it's about 3 years in as short as 6 months or a year. So during that term period, you have available whatever that line of credit limit is. So if they give you 200,000, you have 200,000 during that period to utilize. So if something happens and maybe your equity went down 10, it doesn't matter because you have secured those terms. So just keep that in mind for that period of time, whatever, if it's 12 months or 24 months or 36 months.
Got it. Okay, that makes more sense now. Ruff, I know you got something to say right now. I can see it in your face.
No, this is good. I'm learning.
I know. I never thought about, I've thought about those before, but I didn't realize it would be, because it's hard to get, just calling these banks has like been a pain in the ass. You're gonna hold all the time. You got to connect with your people, get calls back. So and nobody's even brought that to my attention. Like, hey, you can just borrow against the equity. You know what I mean? So I think you're onto something with that. I think you are, Ingrid. That's going to be, I think that's a big niche, and I hate that word niche, but I think that's really going to be helpful for a lot of investors, especially that own like 1 or 2 properties, and the big boys that have, a lot.
Yeah, exactly. And this is something else, like as you're networking with other investors, like talk to those as well. And that's how I found out this one bank that did it, like a 30 something banks, Jesse. And then I found this one bank that said, yes, I'll do it. Like we'll do it. And here are my terms. We close on it. I got like 100,000 out of that line of credit. Great. It's all good. Then I was in Atlanta. Now, local banks only lend money locally, but he knew someone in Atlanta, like this banker. So I connected with this other bank, and we were able to utilize about two of my properties in Atlanta to get that line of credit. Something that I really like about that line of credit is that your monthly payments, most of the time, depending on the terms, are going to be interest-only payments on whatever you borrow. So if you have 100,000 and you need to use 100,000, you only need to pay interest on that money that you use. And once you repay it, you can reuse it again. So it's like a credit card pretty much. And I love having that.
So you're essentially just using it and then refining out of, and then paying it off, and then just doing it again on the next property. Is that what you're doing?
Yes, that's an option to do it. What I'm doing right now is I do private money lending as well. So I charge a fee to loan my money from the line of credit. They pay me within 3-4 months, and they do interest only payments as well on the money that I'm lending. Every month I take that payment and put it in monthly interest on my line of credit. But once they pay me, I pay my line of credit, and then everything else is profit. With the syndications, I do something similar. Usually the deals, depending on the deals that I'm doing, my exit strategy is about years to 3 years, and my line of credit is a 3-year line of credit. So they pay me distributions, which cover my interest rate and then give me profit. So once they exit, I'm able to pay off my line of credit.
Wow, I love that.
Yeah, that's crazy. I can't even wrap my head around it right now. I'm trying to think about it. I'm like, hang on, let me
That's
write
cool
some
how you
notes.
do that. I've never heard of somebody do the line of credits creatively like that, especially to use it for investments like that. So it's really, really cool. All right, guys, we're running short on time, and I know Jesse has a
I know.
million credit line questions, and I want to be respectful of the hour that we come on here for. So, without having a shift, Ingrid, I gotta ask you. We always ask these last two questions, being that this is the big break show. You got to tell us, what was your big break? That whether it was like a life shift thing that happened, some like major like business thing that happened, a personal thing that happened. What was your big break that got you to where you're at today?
Okay, so I would say my biggest, because I mean, you have big breaks along the way, but lately, the one that I would really, really emphasize on is joining the right mastermind. Like when I was into my journey, I was very much about not spending any money. I felt like paying for a coach was like, like too expensive. It doesn't expense. I'm not going to get anything out of it. But then I realized that if you pay for the right mastermind, that's going to open so many doors. And it has. Like, I knew nothing about this private equity and syndication, but that was something I really wanted to get into. And I joined a mastermind, and suddenly, like, it just like opens so many doors. And I was like, oh my gosh, like this, I can do that. And that's when Jesse, like, I'm actually along the lines of I want to start my own syndication as well with private equity funds, because there's
Let's
so
do it.
many opportunities there. People that have no idea that they want to invest. They want to invest, they just don't know they can passively, completely, and still get a good return. So, say joining the right mastermind really helped me a lot. And I would say it may sound like expensive if it is $50 an hour for a coach, or if it is 5,000, whatever the number of investment. We need to start seeing investing in ourselves as that, as an investment, not an expense, an investment.
Yeah.
So something I want to throw in there too, though, Ingrid, and correct me if I'm wrong, right? Because I'm in a couple of masterminds myself, and I feel like you got to come into a mastermind knowing the intention of what you want to get out of it as well. You know what I mean?
Yes.
Because you can join a mastermind and still just be the guy in the background who never asks questions or never goes in with an ask or never goes in with the intention of actually getting something out of it. And now you're really just spending money because you're not doing anything to actually better yourself within that group.
Oh, correct. Yes.
Yeah, I think masterminds are awesome. I mean, it's done wonders for me as well. And you just got to know what you're trying to get out of it, because you can join a mastermind for something you absolutely don't even want to do. What's the point? Just because you join a mastermind does you'll still learn. Don't get me wrong, you'll learn and you'll pick up nuggets here and there, but you got to know what you're coming into it. So I think masterminds are great. So I'm glad that you said that.
And you got to put in the work. You don't just like, I think a lot of people expect I'm going to pay $5,000 to be in a course and I'm going to learn, and then somebody's going to do it for you. Like, dude, it doesn't work like that. Like, you have to like put in the freaking energy. Like, these guys are out there talking to you. You have a mentor. That's really in reality what these masterminds are. You have somebody that's been there, done that, and they're explaining their knowledge to you. And that alone is, and the network that's even behind you, which Rafa's been able to make deals happen just by being in these masterminds and by meeting with other people that are like-minded like him. But you got to do the work. I mean, it's not going to just fall out of the sky, right? You don't just have deals land on your lap. You got to do work. But yeah, you're right. I think that a lot of times people will see a price tag on that and it just scares them. They're just like, why am I going to spend $5,000? I have people that do that with me in my course. They're just like, my course is $5,000. It's not cheap, but all you need is one contract for a travel medical agency and that's covered. And that's going to build your business for years. It's not just going to be like, I think a lot of people just have to get out of that mindset. It's like you're investing in yourself. And I think that, it's like a tuition in college. You're paying this tuition literally to literally get something and probably even make more than you've potentially could make by going to a 4-year college by literally investing in a course. I think that's real. So yeah, thanks for that, Ingrid and Rafa, for your insight. Appreciate that, buddy. I actually do like wearing this jacket. I think I might just roll around with it today, you guys.
It's gonna be a thing now from now on in the big break show. We're all gonna rock jackets.
I know we're gonna do that. Especially when somebody makes us feel like I felt, Ingrid, you wearing that. I was underdressed, and that's like I got obviously.
See, Jesse, I'm elevating your standards.
You are. My standard is flip-flops, an old shirt, and cargo jeans from Vietnam, like in 1954. Like, nobody dresses like me at all, and I'm okay with that. That's my style now. I don't even cut my hair, Ingrid. Look at this. Like, this is what happens when you leave W-2 corporate job, you guys. And if you're watching this, you can see what's going on with my hair right now.
Jesse's growing a bird's nest up there.
I am actually. So, Ingrid, one of the other things, sorry to change the subject. I know you want to talk about my hair, Rafa. He's laughing at me. Learn and apply. Like, what's something that somebody could do? This is one of the other kind of subjects we have in here. Something that somebody could do after listening to this episode that they can literally just take action, an actionable step that somebody could take right now from being 59 minutes into this episode.
I would say, okay, so I'm a big believer in networking. Not just networking. I'm gonna say meaningfully networking with an intention. Not just going to be like, hey Rafa, my name is Ingrid, and that's it. Like I want to know what Rafa is doing. I want to tell Rafa what I'm planning to do. So if your goal is to buy your first property, show up to the next real estate investment meetup locally. Tell people, I'm looking for my first property. I'm looking for my first property, and this is how much money I have. Be vocal about what you want and what your goals are. Before, I was very shy. I'm an introvert by nature. So I'm like, why do people need to know my business? Like that was my mentality. Like they don't need to know what I'm looking for. Since then, I've known better. So when I meet up with someone, hey, I'm looking to invest in syndications. I'm a private money lender. I'm looking for multifamilies, 10 units to 20 units. So now I start getting those people come to me and be like, hey, I found this deal. You want to partner with this deal? I'm like, well, let me underwrite it. So it's gonna sound like you're bragging. It's not. You're networking. You have an intention. Your intention is to buy your first property or syndicate or whatever it is. Be vocal about it. I'm looking for this. This is how much money I have. Let's talk. So be vocal about what you want and your goals.
I also, you know what, Ingrid, man, you're dropping so much good stuff here. Like this is a really good episode. One of the biggest thing too is it doesn't matter, guys. Like for all of you guys listening to this, whether you're brand new and know absolutely nothing about real estate, go in with the intention to learn. I had a friend who I invited to a real estate meetup once, and they were like, hey, I kind of left because like everybody there has experience and they know what they're doing. And I'm like, dude, well, the point of you being there is to learn and get started. So when people ask you, say, hey, I'm here to learn because I know nothing about real estate and now I want to get into it. And people will naturally go, oh, dude, this is what I'm doing. Let me tell you how I did it. They'll come in and literally spill the beans on everything that they do. And you're going to pick up so much rather than just being that new person who doesn't know better and just wants to sit in the back. Like the intention is to learn. The intention is to network. The intention is to make partnerships. The intention is to make deals. The intention is to just tell people what you do to see who ears you catch so that they come talk to you about it. Right. So make sure you guys are intentional about that. So yeah, thanks for sharing that.
Yeah, 100%. Ingrid, where can folks find you? I found you on Instagram. I don't remember if you got shared or whatnot, but I remember looking at your content thinking like she's going to be doing some big things. Like she's going to make stuff happen. Like I have this weird intuition when I talk to people. So I'm giving you this like clout right now. All right.
Are you like reading my future? I like it.
I've already read your future, Ingrid. That's why I'm trying to partner with you right now. We're trying to figure stuff out. I feel like you are onto something incredibly great. I feel like you have a course that's about to come out soon around this financing stuff. I think that there's a bunch of opportunity for you. But yeah, where can folks find you?
So my Instagram handle is at engineer.on.fire, engineer on fire. I used to be an engineer and I'm working towards, well, I'm fire now, but that was the whole intention of the handle. But my personal website is www.ingrid, I-N-G-R-I-D, Duque, D-U-Q-U-E.com.
Awesome. Yeah. Follow her on the gram, guys. She's got some really good content out there. Talks about creative financing. You talk about kind of a little bit of everything, midterm. You kind of drop a little bit of a lot of stuff on there, but check her out. She's got some really good stuff. Ingrid, I'm super pumped that you were here today. I'm glad that we got you on the show, and I'm excited for more people to learn about you and what you have going on. And I'm excited to see what your future holds. So I appreciate you for being here and for making me level up, dressing like an actual human and not like a degenerate. So I appreciate that.
Well, thank you so much, both of you, for having me.
Yeah, Ingrid, this was great. Thank you. This was a really fun conversation. I appreciate it. I love having good, fun conversations. This is probably one of my favorites. So
yeah,
appreciate you.
Yeah. Ingrid, Rafa says that every time too, by the way, but hopefully you mean it this time, Rafa.
I don't need to hear that, Jesse.
Jesse's always just trying to be like, dude, Rafa, like always trying to make me look bad on the recordings.
No, I don't have to make you look bad. You look good all the time, bro.
Dude. Whatever, bro. Anyway, Ingrid, we appreciate you being here.
Yeah, we appreciate you. Bye, guys.